My name is Ronit, and I'm your host for this latest episode of our podcast series. As you can see, we're filming today from Point Zero Forum, and it's a real pleasure to be here. This is an event organized by the Swiss and Singaporean governments, and it's all about where technology and finance and policy meet. And I have two awesome guests today. Staci from Algorand and Rebecca now with Polygon. Thank you, ladies, for joining me.
Thanks for having us. Thank you so much.
First question, I'm starting with Staci next to me. Staci, talk us through your journey of getting into the blockchain world and what made you switch from your previous ecosystem environment to get into blockchain.
Yeah, I mean, I guess I have a pretty long TradFi background. I ran the microcap markets for the NASDAQ for a number of years. I was at the US Treasury Department. I was at JP Morgan for 8 years. I ran the Center for Financial Markets at the Milken Institute for a number of years. And at Milken, I was asked to, I was doing a partnership with the National Institute for the Press, and I was asked to teach journalists about this thing called Bitcoin in 2013.
Okay.
And so, unlike most people, I had to learn it in order to teach it. And I've always cared very much about emerging markets and developing countries and access to capital and financial inclusion. And so, when I first learned about Bitcoin, I kind of locked myself in my house and just crammed it into my head.
Did you sit down with a white paper and go through it?
I did, yeah. And there was, I remember, a podcast in Germany. It wasn't in German, but which Gavin Andresen was on, a four-part podcast. And I remember listening to this thing over and over again, just trying to figure out how does this proof of work exactly. And I thought, this could be like such an important solution for financial inclusion. And it was a little bit not. It's not exactly fit for purpose, but that was what got me into it. And then it was always a side hustle. I was working on broader policy issues, but it got, it gets bigger and bigger and harder to catch up. And so I took the plunge last year. And
went all in on
Algorand. And
so all in Algorand.
Yeah, they headhunted me to be on the board, and then I became the CEO last year.
Awesome. We'll come back to Algorand in a second. Same question for you, Rebecca.
Yeah, I mean, my blockchain journey started in 2013 too, but prior to that, I was a lawyer at a large white shoe law firm in New York as a litigation and regulatory enforcement lawyer. I primarily worked on financial services litigation, sort of novel asset classes and cases that came out of that, including with the mortgage-backed security crisis. I did a lot of that work. But I also worked on early peer-to-peer file sharing cases in the music context, which actually, as a lawyer, has a lot or brings a lot to what we're dealing with from a legal and regulatory space now in the crypto world. And so I went and clerked actually in 2012, 2013 in the Southern District of New York, and I'd ride the subway down all the way from the Upper West Side every day, and I'd read the Wall Street Journal, usually the business section, because I was obviously being exposed to so many different and new things, particularly in New York in the financial space when it would come to cases that were in front of my judge. And one day, far back in the financial section, was an article about Bitcoin and Mt. Gox. And I remember sort of the same type of thing, but on a different spectrum, saying, this is very novel, and it is going to have a lot of broad impacts, and it's going to have a lot of impacts legally as well. And I called my husband when I got off the train and told him about this revelation and said, also, we should buy some. And he was like, absolutely not. He's in TradFi. Like, we just got through the mortgage-backed security crisis. We're not doing that.
Therefore, you're still working.
That's exactly right. And I bring that up to him all the time.
So you're still married to him.
We are still married, yes. We have many children now, all of those things. But I kept learning about it. I actually went back to my firm after my clerkship, and then based on, this is important based on what the podcast is about, I wanted to do something entrepreneurial as a lawyer. And the thing to do is really go out on your own and figure out a particular practice area. And I wanted to stay a generalist in many ways, but have a specialty. And I was still so interested and intrigued by all the different things that I thought would come out of crypto. It was 2016, 2017. Things were just really starting to take off. So I went to a very small firm and really started up a crypto practice then, and then worked very deeply with mostly software developers for all of my career until I went in-house to become general counsel at Aave, and then recently, about 6 months ago, became Chief Policy Officer at Polygon Labs.
Awesome. Let's dive a bit more into Algorand and Polygon. So starting with you, Staci. For the audience who are not, say, blockchain natives, explain Algorand to them.
Yeah, so we are founded by a MIT professor named Silvio Macaulay. He won the Turing Award for computer science, was kind of like the Nobel Prize of computer science, for a couple of things that he invented that the crypto ecosystem uses: zero knowledge proofs and verifiable random functions. He did not have the idea, though, to attach money to these things. And so this is why Satoshi Nakamoto is kind of such a genius, one of the reasons. But he watched this, ecosystem developing based on his primitives. And I think he decided, I want to get in on this game. I could probably build one of those. It's pretty good. And so he immediately was able to raise money in 2017. We went live in 2019. Haven't been down for a second since, just celebrated our 4-year anniversary. And it is a pure proof of stake blockchain consensus protocol. It's a very, the juice in blockchain is all about the consensus mechanism. It's a very elegant consensus mechanism that allows us to be, decentralized but also scalable quite easily. And it has a number of features: very low transaction fees, very low carbon footprint. And unlike most other chains, it has instant finality. So you're done and done in 3.3 seconds, which is a feature of the consensus mechanism that Algorand has.
And so if you put Algorand in the context of all the other chains, there are literally hundreds of these. So that point on speed and finality, would you call those out as like distinguishing features of Algorand? Or?
Yeah, I mean, it's built to be enterprise grade, and so it can handle 6,000 transactions per second. And again, it's this instant finality in 3.3 seconds. There's no kind of soft forking, which is sort of like how some others work.
And you don't have to settle it down to Ethereum either, right? You just you have the special finality. You don't have to do a separate settlement.
Exactly right. It's its own layer one. It has Ethereum
EVM.
Virtual machine, and we have an AVM, an Algorand virtual machine. So we're our own base layer.
Right. And same question for you, Rebecca. Give us a little bit about context of Polygon.
Sure. Well, so Polygon Labs is a software development company. That's what I'm employed by. They developed, people call it many things. I would say it's probably a side chain that has a lot of the features that Staci was talking about as well. It's very fast. It is also proof of stake. It has its native token because of the staking mechanism and things like that. But I think one of the exciting things that Polygon Labs keeps doing is building additional types of software that are meant to sort of enhance the blockchain experience. And to go back to sort of the beginning of what Staci was talking about, Polygon Labs launched truly the first ZK EVM. So it's an Ethereum virtual machine that is built on ZK proofs. So it will scale significantly, but unlike Algorand, it will always have to settle back down to Ethereum. But it will be able to. Right now, I think it's estimated, and it's still basically in beta. It just launched, I think, 2 months ago in March. It's about 5 times as fast as Ethereum, probably maybe 10, about 5 is a conservative number. And I think when it's really working at full scale, it'll be 50 times the speed of Ethereum and also significantly cheaper. And then Polygon has also built something called Polygon ID, which is, people call it many things, decentralized identity or self-sovereign identity. I really think of all of these types of things as allowing you to self-custody your identity as you move through this pseudonymous system, but able to do things like, interact with institutions or things like that. So we really are at our core a software development company, but because blockchain is such an emerging space, they obviously thought having a policy function was incredibly important given everything going on in the world.
Absolutely. Right now. We'll come back to policy in a second. Let's talk about use cases. Because one of the big, whatever, $64 billion or $64 trillion question is sometimes the technology gets people enthused, but there's still challenges in terms of scaling this technology in terms of use cases. Staci, you spent a lot of time in the TradFi world, but like me, how do we get what's called TradFi or traditional financial institutions to engage with this space or to use an Algorand or another L1 or a sidechain? What's been holding it back? And what's the catalyst for the...
how much time do you have? I think TradFi will, we're always, so crypto is about 80% retail, 20% institutional.
And it has a genesis in retail or P2P.
Exactly. And traditional finance is 80% institutional and 20% retail. So it's exactly the opposite. And I think it will get there because the idea of tokenizing assets and being able to settle immediately is so powerful that the industry will get there. But we are very far from that. And I think there's probably 5 big things, and my 5th will be regulation and tax, which I will just turn that.
That'll be an awesome segue.
Yeah, but I think the first is the lack of trust in the crypto ecosystem. So crypto is a pre-funded market.
Right.
That means I don't know that you have my money unless you give it to me.
Right.
Right? That is not how traditional finance works.
Mm-hmm.
And so you have to solve for that counterparty risk, which traditional finance solves in a kind of clearinghouse mechanism, right? You also have to solve for banks. And that means you've got to solve for, credit intermediation and custody. Like if you're going to cash settle a trade in crypto, like what bank, if I got to send $200 million, like what bank am I going to send that to? Some bank I've never heard of. There's like 10 banks I'm willing to send that kind of money to, right? The operational complexity to do that is severe for an institutional investor. And so you've got to have like your OPM and EPM systems have to talk, your back office has to talk, your compliance systems have to talk, right? Like that is very operationally complex. Then on top of that, your operational security is so complex. Like what's a wallet? Who's the key? Like who actually has access to that key? Like is it the trader on the trader floor? Like who can actually move that money? And if that person doesn't come in, who else can move that money? Like how does that work? And like not your keys, not your coin does not work in institutional finance because it's not their money. It's their custodies, they're custodians of customer money. So you have to, and this has nothing to do with blockchain, you have to solve for all of that stuff. And then an asset class is not an asset class unless you have derivatives. Big institutional players, they are not buy and hold investors for the most part. So that means you have to be able to hedge, right? So you need futures markets, you need options, you need to be able to hedge, you need to be able to, have puts and upside call protection, all of that stuff. Like it's very, we're very far away from being ready for institutional money. As much as I think my layer one can handle it. It doesn't matter because it's all this other stuff around it and then the last is you have to have regulatory and taxation certainty. And with that, I will.
Before we get
to
to Rebecca,
about use cases before we
before we get to that, can I just circle back? You said very early, and because both Americans.
Yeah.
So let's use a baseball analogy.
Yeah.
I have no idea about baseball, but let's use it anyway because people have been telling me for years we're in this innings, that innings. I know what it means. But how many innings? 9. So there's 9 innings in baseball. What innings are we in when it comes to blockchain?
I don't know, 1 or 2.
2.
Yeah.
You say 2?
2, yeah.
At least 1 or 2.
Yeah.
1 or 2.
Yeah, but this is a discussion about financial use cases, and I agree with basically everything that Staci said. But we can abstract that out to a larger question, which is like the sort of user experience has to be made much simpler for my mom, or I'm from a small town in Illinois, for an old lady in a small town in Illinois. Not that I'm talking about my mom; she's not old, but
talk about old men as well. Or even young men.
To use this technology. But what I'll say about use cases is there has been, especially because Bitcoin obviously is a peer-to-peer or transfer of value, and so this was really thought about as a way to sort of build out a larger financial system, but really it's evolved to building out a larger system in general that abstracts away intermediaries, right? And so actually as part of just a policy initiative, we launched something called the Value Prop 2 weeks ago, which is an open database of use cases across 39 different types of use cases, from universal basic income to sustainability to social impact to land registries and things like that, to show that there are these like real projects out there that are using blockchain technology to build in a way that hasn't been built before. So, but I still, agree with Staci. Like, that's great that that's out there, and we have 300 applications that are up on the database. And since we launched, we had about 120 more submissions that came in. But we still have to be able to make it really easy to use.
And we have to be plenty of use cases. Like for TradFi to come in, like institutional investors, it's just a whole other ballgame.
Policy and regs. That was the 5th point that Staci brought up, and that's your kind of core area. You're whizzing around Europe this week. So today we're in Zurich. I can share with the audience you were in Brussels yesterday and Paris tomorrow. And how are you seeing the European and Swiss regulatory and policy landscape evolving? Sort of first hand, you were in the UK recently as well, compared to back home in the States. And let's keep it clean.
I always
we talk about regulators.
I always keep it clean.
I mean, you can be colorful.
She is colorful. I'm more black and white.
I'm loving the colors.
I will say that we did a workshop yesterday on ZK technology and then also on use cases. So this is a very timely discussion with a number of EU regulators and policymakers. It was a highly technical discussion where you had policymakers engaging on deep questions on ZK proofs.
Right.
That's an advanced blockchain topic.
Sure.
And they can get there because they've already spent the last 5 years trying to figure out at least how to regulate centralized crypto markets in a very, I'll say, basic way. And so the EU.
So there's a depth of knowledge already with some of these counterparties.
There is. And they and one of their regulators closed out the session yesterday by saying, we see this technology as the future of our economy. And we are going to build out our systems here in order to ensure that, the next iteration of the internet can do this. And they're building their own decentralized identity solutions. And they're actually engaging with the technology. They have experience centers there. So in the EU, generally, it's a very different feel, but it's a very different feel everywhere else. Like if we're talking about Switzerland and Singapore, Singapore has been experimenting with sandboxes and in many other ways. Japan has had regulations in place for centralized crypto exchanges for a long time. Like there's just been a more sustained engagement around the globe that has been less politicized. And look, some of the bad reputation does follow crypto in places, even where they are building out really developed regulation. But there's just a receptivity to technology, including AI, that this is sort of the next wave of how our economy is going to be developed. And so I think that people are really engaging in a very significant way.
So you have sample selection bias in your roundtable, of course, as well, because if you're having a roundtable here, the people that are here at point zero are the ones that care. And
Oh, this was in Brussels, though.
Oh, in Brussels. Oh,
yeah. It was in Brussels yesterday.
But when you have a similar type of event in the US, do you get the same depth of knowledge from the regulators and policymakers and the same enthusiasm that you've encountered in Brussels? And it's interesting, massive generalization coming here from me, but most Americans who come to Europe will say, if they've got it from a tech background, these Europeans are trying to over-regulate us, they're going to stifle innovation, they're going to kill it. And you're kind of saying something slightly different, or not?
Well, yes and no. So
okay,
Mika
yes and no.
Really...
she's still a lawyer.
It depends.
It depends, okay.
Mika, I think, is obviously the first out there, the first that's been implemented. But there are attendant pieces of regulation in the EU, like the Transfer Funds Regulation, the AMLR, the Data Act, and others that may have impacts on blockchain technology that go beyond Mika's scope or sort of do have some of what you're talking about is like the GDPR is seen as over-regulating on data privacy and things like that. I think there has been over-regulation in the EU. But given where the technology is, I mean, this is what we got, and we got to sort of work with it. I think the UK is really building out a very impressive, at least as of today, and this is a level of intent. It's not implemented except on the stablecoin side. They have implemented stablecoin legislation in some ways. In the US, I would say
what's going on.
Yes, I think it's a bit more of a complicated. Like Staci said, how long do you have?
2 minutes.
It's a bit more of a complicated question in a number of different ways. I think that from the policymaker perspective, so Congress, legislators, things like that, there are both staffers and members who have engaged with industry or have independently learned about the technology and do have a deeper level of understand that decentralization is a novel concept. That you need certain types of cryptocurrencies to make blockchains work and the like. And so you can have the same level of enthusiastic discussion and understanding of where this may take either financial markets or the internet or those types of things. I think that there is such a strong feeling that we've seen from the administration, especially in 2023, that some of the regulatory agencies may not be as receptive to open discussion. But there are other agencies on the administrative side, including and especially the Treasury Department, which has really done a great job of engaging and thinking about the technology and what it means and sort of opening up dialogue. So I don't think we can paint the US with this broad brushstroke. People outside the US certainly do. And I've had a lot of international regulators and policymakers saying, what is going on there? But I don't think it's fair to paint the entire US government in the same way.
The US is a complex old beast.
And there are forward-thinking regulators at the SEC, at the CFTC, in New York. They're mostly women, but they are forward-thinking. for
There are
individuals.
one or two of them here at this
Yes.
event. We know. Last question, and I'm going to go back to the baseball analogy. So we're back at point zero forum. Say we're 3 years from now. What innings are we in when it comes to blockchain adoption and scaling? And I'm thinking like it's more than just a relatively, I don't mean to be dismissive or pejorative about this, a relatively niche activity that is. So we've got more mainstream institutional adoption. We've got sort of more mainstream mass consumer adoption. Are we still in innings 2? Is it innings 3? Is it innings 7?
I think, the famous, now deceased economist Rudy Dornbush said, things always take longer than you think, and then they accelerate faster than you could imagine. And I think it's going to be something like that. I think 3 or 4 years from now, it either kind of won't exist, or it'll be this like niche thing kind of crippled
Like
along.
cottage industry.
Yeah, it'll be a cottage industry, and there'll be a couple of use cases that are kind of have found their way to the front. And, or it'll just take off. It'll never replace traditional banking.
Of course,
this was just a little bit of a fantasy, but I think it'll
actually, we
find
just said
its
it.
place.
Of course, I think we might be like a slightly TradFi influenced echo chamber.
Yeah, but
I'm
it's
sure
not
our crypto
any,
bro friends outside are like, of
hundreds
course it's going.
trillions of dollars versus it's like $1 trillion.
Yeah.
It's nothing.
Do you think we could be like a really interesting takeoff
think we could
point,
be an inflection
or
point.
it's
But I think a lot of the things that you
withering away?
talked about need to happen. Like we have to get a lot of that right first, lay the groundwork properly, and let the thing go from there.
Although, let's say back in 2021, 2022, people kept saying, oh, well, what do we need for mass adoption? Everyone would say institutions and regulation, and people thought regulation would have to come first, and then the institutions could get in. But
the other way, right?
It does seem like it's coming the other way a little bit with the, BlackRock.
Yeah.
I know an ETF
sides,
is not the same thing, but it is a step forward.
It is
EDX
interesting, though.
markets, a big step forward.
Yeah.
I think that's very interesting. And so I think that there is going to, I do agree with you, like this has been the slow run, and now I think we may see the takeoff.
Yeah, but and then U.S. regulators, their back needs to be against the wall before they actually maybe do things, and so maybe the back's against the wall now, and we can. But
it's
what
definitely.
did Winston Churchill say? Something like, you can always trust the U.S. to do something right after it's tried all the wrong things first, or something like that. Yeah,
That's a quote we've used a few times as well in the context of financial markets.
But I think you're right though about and the Singaporeans will make this argument that regulation kind of has to follow because you have to see what's going on,
totally.
and then you kind of can adopt.
But it's been sometimes we forget it's been the history of money since day one, literally. Get a private sector initiative, then the public sector comes and regulates it or takes over. The central banks, I mean, these were private companies before they became these august institutions. Like Bank of England was a private company.
Yeah.
We've run out of time.
Okay.
We just scratched the surface, but it was really interesting. Thank you, Staci.
Thank
Thank you,
you.
Rebecca.
Thank you very much.
It was great to have you on.
Great to be here.